In today's video, traders, I'm going to be talking about rate of change, or the concept of momentum shifts and the changing of the strength of a market and how we can potentially find great reversals using this concept. Stay tuned. Let's dive into rate of change right after this. Hey traders, welcome back to the channel. My name is Nick. I make all sorts of Forex content here on YouTube. And if it's your first time here, consider subscribing down below if you're looking to learn and grow as a trader. There's tons of free stuff here. I've got free courses under the playlist section and all other sorts of stuff to help you out as a trader. Today we're talking about rate of change. And rate of change is an interesting concept. I don't know if this is what other people call it, but this concept is just something I've kind of coined or called rate of change. It's not really very sophisticated or fancy, but the idea here is that what we're going to be studying with the concept of rate of change is the momentum or the strength of a market and detecting potential weakness to help find potential resistance points or even levels or areas of the charts where we might start to see a market shifting. And so what this concept really is, at the underlying core of it, we're talking about momentum. When a market makes a serious move to the upside, the idea is that there's a big trend and then the market can continue in that direction for a while. Well, rate of change is the idea that, okay, well, if we take that trend and we piece it apart, right, and we take a look at the way the trend is moving, right, we might notice that the rate of change or the speed at which the trend is moving is changing. For example, take a look at this. We have a movement to the upside, right? A very sharp movement, but then we also have a gradual uptrend, and then we have more serious uptrend. Well, the idea here is that we could potentially detect areas of the chart where we're starting to see the market slow down or speed up or detect the momentum of the price movement. And this is purely just taking a look at the rate of change or the rate of the movement of the market. And I've got some examples here with you guys, but basically, again, that's the concept, is taking a look at markets that are moving, right? They're trending to the upside, and we're taking a look at the speed at which they are trending, right? The rate of change is going to potentially tell us how strong are buyers or sellers that dominate a market. And so what I've got here is I've got the dollar Swiss here. I've got a couple examples that I just want to talk about here regarding rate of change and how they might have been examples that you could have used or you could use into the future with this concept when talking about markets that are trending and you're looking for the reversal, right? So if the market is going down, what we're looking to detect is a slowdown of that market to potentially find an area of where we could start to see a turn back or a reversal. So we're taking a look here at dollar Swiss. We're seeing on the 4-hour chart, we have this downtrending market, right? And let me show you guys this. If I just take a trend line and I just draw, just generally, I'm not drawing a trend line, but I'm just drawing a general idea of what we see here happening, right? We have this market right here. We have that trend to the downside. Well, if we draw another trend line of kind of best fit, right? Just drawing the direction of the market, what do you notice about this kind of market? Well, you can see if we zoom in a bit more, take a look at the differences in these two areas, okay? Again, talking about rate of change, we have the concept here, number one, area number one, we'll call it, and area number two. Well, area number two seems a bit different than area number one. Area number one is a strong, extreme, kind of decline on this trend. A lot of sell pressure here on dollar Swiss on this area number one. Well, area number two is still a downtrend. We still have sellers in control of this market, but the price movement is gradually slowing down, right? So we're losing that rate of change or that momentum to the downside. And sure enough, in this particular case, and in many cases, this could have signaled the start of where sellers were slowing down, and ultimately we saw a major reversal. Okay, so could this tell you every single time? Probably not. It's not going to be a perfect thing by itself. No price action indicator is. But the idea here is that we can read the way the market is moving and flowing and potentially identify areas where we're starting to see sellers lose their strength. So in this area number two, this is the one we really want to talk about. We have this market that is making a downtrend, but we're starting to see the gradual decline or slowdown of that market. What is that telling us about the market in this area? Well, it might be telling us that the sellers that were previously in control, sellers may be drying up and prices may be getting a bit oversold in the sense that people are stopping to be so willing to sell this pair. Because in reference, when we're talking about this area number 1, right? Sellers are willing to continue to sell into this market. Obviously, that's why it's making a movement to the downside, as people are still selling this pair pretty aggressively. Well, when people are not buying or selling so aggressively, we start to see people still selling, still moving this market down, but at a more gradual or slowed down pace. That could tell us that sellers might be drying up short term and that we could see the reversal or the start of a new trend where people might start buying this market back up, as we saw in this example. Well, I think that the best way to look at this is to consider doing it again on another example here. Of course, I've already taken a look at what happens, but the idea here is that we can hopefully learn from this concept. So when we're looking here at this market, let's do the same pattern, the same concept that we did the first time. Let's read that, okay, here is we'll make it blue, right? A sharp increase in the trend to the upside. Well, if we take a look here, we have this second part. Let's repeat our process again here. You can see area number one and area number 2. And let's talk a little bit about the flip side or the long side and how this might have been spottable. So we have number 1, right? A sharp movement to the upside, very strong trend upwards, right? Buyers completely willing to keep buying this price up all the way up there without much hesitation. We don't even see much pullback, right? So in this area number 1, the thing we're looking for is to see a severe buying area where we don't even see much of a pullback anywhere, right? That's a strong area of buying. When we have number 2, this is a little bit more balanced or slowing down, right? And take a look at something, guys. Notice that just because we have a slowing down market does not mean that we immediately reverse, right? What we see here is that people are still buying this pair. It's just moving at a slower rate. Well, so then you might ask, well, Nick, how do we use this information if we have it, right? So just because it's slowing down, it doesn't tell us that the market is going to reverse right then and there. Well, this, guys, is more a concept of identifying that markets are slowing down and that there might be a reversal coming in the future. So how can we use that information to our favor? Well, we can combine it with other technical factors. For example, we could take a look here and say, okay, well, if we're formulating a bearish counter trend hypothesis, right, because we see that counter trend starting or that trend starting to slow, right, in area number 2, well, if we started to say, well, you know what, now I'm going to draw some trend lines here and I'm going to look for signs of the reversal in a bigger way, right? If we have that sort of stuff in our watch list, right? For example, we can move these two things for a second. And let's say that, again, we could even draw the trend lines just like normal trend lines and say, well, we had a strong trend to the upside here, and now we have a slower uptrend here. Well, if price decides to break down, maybe we look for sell trades in this example in favor of a continuation downwards, and you could even trade the longer term move there, depending on how you like to use this concept. Again, this concept is mostly a very simple one. We're literally just taking the rate of the movement or the rate of change on a chart and saying, if this thing starts to slow down, maybe we look for a bearish bias. Maybe we look for opportunities for the counter trend, especially when these trends, guys, get really stretched to the upside or downside, right? You could start to look for signs of reversal. Let's talk about really quick before we wrap up here. You can take a look here on this first example that we talked about. We could have done the same thing with a trend line breakout as well, right? So if we just, very simple concept, if we just took that kind of counter trend trend line that we did see, if we looked for the breakout here, there might have been an opportunity to ride some of that upward momentum. In fact, we even got a retest, right? So we saw the break, we saw the retest, and we saw the continuation of this market movement. And part of that, I would say, is that because you could have potentially detected this concept with the idea of slowing momentum in the market. Guys, I hope this concept was helpful to you. If it was, make sure to like the video down below and also subscribe. I've got more content for you to check out. You can check it out here.